This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello, Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And today we have a very special show, as all our shows are, but this show is special because it's timely. It's timely. And we have a very special guest who's been with us for a long time. He's an old friend from Hawaii. He'd be wearing his, as the Japanese say, araha shirt. And he's in Hawaii right now. I call it the Communist Republic of Hawaii. And we own property there. And we're talking about what happens when the government gets involved in your own property. It never turns out good. And just FYI, Hawaii has the seawater, the ocean erosion is taking down houses. And as Karl Marx said, one of the objectives of Marxism was the abolition of private property. And Hawaii is as Marxist as they get right now, because if you have private property, they won't let you fix it. And the ocean will take it away. And then for the last 30 years, I've watched houses just disappear, and the government will not let you fix your property. I can't believe it. So anyway, that's why I call it the People's Republic of Hawaii. Great people, beautiful place, but the government is 100% Marxist. So we have a very special guest from Hawaii with his araha shirt on. It's Bert Dolmen. And Bert is famous, but also infamous, because he makes predictions and calls that generally piss off people. But the great thing about Bert, he has the stats, the facts, and everything to back up his calls into the future. And as they say, may you live in interesting times. It can't get more interesting than this. So our guest today is Bert Dohmen. He's the head of Dohmen Capital Research. And I've listened to him for years. We've been friends for years. And his calls, I would say about 98% on the money. His newsletters, I recommend everybody read it, because it'll give you up to the minute, as the Mexicans say, ¿qué pasa? What's happening, man? So Bert, welcome to the program.
Thank you very much, Robert. Thank you for that generous introduction. I started my business here in Honolulu 45 years ago. So this was a great place to start. So I'm wearing the Aloha shirt today in your honor. As a celebration of being 45 years in business, in the research business.
Thank you. And your calls have been controversial, accurate, disturbing, and when Bert Dolmen talks, people get upset.
Well, only the bulls sometimes. At the start of bear markets, the Wall Street has a tough time saying the word sell. That's just prohibited on Wall Street. Yeah. But we can do that because we have no conflicts of interest.
Good. So the point here is, tell us what Dohmen Capital Research does.
We just research the economy and predict where it's going to go, and as well as the investment markets. What makes our forecast stand out is, first of all, of course, the accuracy. We are able to catch very often the exact turns from bull market to bear market, sometimes within a day or two. And you can only do that with advanced technical analysis, which measures money flows. That's the only thing that can change the price of anything, is a change in supply and demand. It's not earnings, it's not dividends, it's not all this stuff that you hear on TV. No, the only thing is a change in the supply and the demand for the investment.
Great. And you have the Wellington letter?
We have the Wellington letter. That's what we started with. It was in January of 1977. Only 3.8% of all investment advisors at the time were bearish. And I said, my God, don't they see all the signals, the technical signals, that we're going into a bear market? And so I said, I want to put this in writing that I'm predicting a bear market. And so I started the Wellington. It was the first issue. We sent it to people in the media, and then the Wall Street Journal picked it up for the Herd on the Street column, because they couldn't find any bears. And it was Gene Marshall, in fact. I didn't know him at the time. And they ran the whole column was on what the Wellington letter was saying and why there was going to be a bear market. And it was a 15-month bear market after that.
Right.
So that was what put us on the map, and thank you to the Wall Street Journal.
Right. So the point here is there's a lot of newsletters out there today. If you subscribe to only one, I would subscribe to your newsletter. That's how much, I mean, I don't endorse, I don't recommend and all that, but we're an education company. And I love about your report is that it's written pretty simplistic terms, but you use pictures, which are for guys like me. And then you back up your claims with the facts. You know, as that old saying goes, you're entitled to your own opinion, but you're not entitled to your own facts. And it seems every time I watch CNBS, they have new opinions and new facts all the time. I watch CNN, I'm going, where do they get that fact from? It's an opinion. You know, they can't tell facts from opinions. So the beauty of the Wellington letter is you have facts, you have opinions, but you back everything up. If there's one newsletter I recommend, that one. Because we're an education company, we don't tell you what to buy or sell. So Bert, again, this is May of 2022, and you and I are old guys. Did you ever think it was going to get this strange?
Yes. In fact, in early 2020, this was when COVID was just starting.
No, Bert, 40 years ago, did you ever think we'd get this strange?
No, at that time, no, I never would have expected. There was a lot of gloom and doom at that time in 1980.
Right.
And Jimmy Carter, et cetera, you know, well, you can say what you want to about who's president, but anyway, it was a gloomy time. But this bad, you couldn't, if you would have written a novel even a few years ago, people would have said, that could never happen. And here it's happening.
Yeah, it's happening. I can't believe it's this strange.
Yeah.
Anyway, again, this is May 2022. In your last letter, you were talking about inflation and all this stuff, interest rates and all this. So in a nutshell, this is a 25-minute program. What do you see coming in the future?
Well, basically, everything that we were forecasting about a year ago is coming true. And that is always the greatest thing when you make forecasts and then you see them coming true and you say, okay, so our analysis was correct. Now, if they don't come true, then you say, okay, back to the drawing boards. What did we get wrong? Okay. And that's the way to approach life. Nothing is static in this world. It's dynamic. The whole universe is dynamic. And so you have to say, okay, I'm on the wrong track or I'm on the right track. So when you get confirmation that you're on the right track, then you say, ooh, so the other thing may also be coming true. Like 2 years ago, we said, according to the long-term cycles, we should now go back to the 1930s, which was 1 decade of total catastrophe, terrible policies in Washington. We had dust storms, we had droughts, we had famines, we had wars. And I named those in 2 years ago, was in March, I believe, of 2020, that these things were going to have. The drought has come true. Now they say this is the worst drought in the Western United States in 1,200 years. You can see Lake Powell. The water level is 150 feet down from normal. You know, you see the locust invasions in Africa all over, eating up everything that's green. So it's all coming true. The one thing that had not come true by the end of the last year was wars. That was the last item on the list. And here now we have the war. You know, so the cycles do repeat. This is a long-term cycle. Right. It's going to last 10 years.
So let me say that again, please. If there's only one newsletter, I'd recommend the Wellington letter. I make no money from this. I do it because I respect this man. The thing I'm smiling about, not that they're anything like this, but I was just watching on CNBS, Janet Yellen, and here she is, the Treasury Secretary, and she's talking about the environment. And one of the congressmen just went into her. He says, what the heck are you talking about environmental planning and all that? You're the Secretary of Treasury. But she's gone so woke, if you know what I mean. She is so environmentalist, and she doesn't talk about the economy. I mean, why? I mean, Bert, have you ever seen, I am not Republican or Democrat, but we got 3 incompetent people. We got Powell, head of the Fed. You got Biden, who's lost in space, and Janet Yellen, who's now environmentalist, not an economist. I mean, que pasa? What's going on, Bert?
Yeah. Well, we definitely don't have the smartest people in the country running the country. So, but that's a different story. We cannot change these things.
But you can
all we can do is we can protect ourselves,
correct,
our family, and in this case, for you, your listeners, and for me, our subscribers. So that's the most important thing. When I was in my 20s, I thought I could change the world. Well, after a while, I gave up on that idea.
The other thing when your letter is so simply done, great pictures and all this, but some of your recommendations I cannot do. I mean, they're pretty sophisticated stuff you're putting out there. Simply said, but I think it's good for people to read the Wellington letter to find out what skills you might need. And the reason we have like Andy Tanner as a Rich Dad advisor and John McGregor, McGregor's from Hawaii, his father was head of FSB, First Hawaiian Bank anyway. But they're all saying you better take care of yourself. Don't just sit there, buy, hold, and pray. I mean, isn't that what you're basically saying? Don't sit there and just listen to the old song and dance and buy, hold, pray.
Exactly. Forget buy and hold. That is the road to financial ruin.
Right.
You see all these people I was watching this morning, and finally we get the bulls converting to more concerned investors. They're starting to confess everything they got wrong and so on. Well, it's much better not to get it wrong in the first place. In late November last year, so 2021, we wrote, this is the start of the bear market. And all the signals, we showed the charts to confirm it. We said, we've seen 10 months in 2021, 10 months of a distribution period where the market basically went nowhere. People don't realize this, but the markets went nowhere in 2021, and people thought it was a rip-roaring bull market because of all this garbage, the cryptocurrencies and the SPACs and all of this stuff, and they hyped that stuff on TV. I said, the mute button on your remote control is there for a reason. At the beginning of bear markets, you have to hit that. And just look at the picture. Once in a while, you see somebody smart coming on. And, when you're in a business like I am, I know who I want to listen to. And there are very few. And then I turn the sound on, So that's the way I approach the markets. But right now, it was evident 2 years ago, I said, we're going to repeat the period of 1978 to 1981. And that is skyrocketing inflation. In 1978, we predicted a 20% prime rate. And that was I was in a seminar with the chief economist of Goldman Sachs who came over here. And he, in the question and answer, I said, he was predicting 12.75 high in the prime rate. And I said, what do you think about 20%? That is our forecast. And he said, that is absurd. Our economic system could not stand that. And I said, yes, it could if inflation is high enough. And that's exactly what happened. We got a 20% prime rate in 1980, in March 1980. Then Paul Volcker took the foot off the brake. Interest rates dropped. The prime rate dropped down to 12.75% by June of that year. And then I noticed in the unseasonably adjusted money supply numbers that they were stepping on the accelerator again. I said, by December of this year, we're going to hit a new high in the prime rate. In other words, above 20%. And on December 10th of 1980, we had 21.5%. So our forecasts were right on the button, in all the interest rates. The Wall Street Journal had top 10 economists and their projections of interest rates. And so we put ours below that, which did not make the Wall Street Journal. Right. and it was right on. We were right on in each one of the interest rates, T-bonds, prime rate, Fed funds rate, everything.
Right. And that's why, I was, you and I were living in Hawaii at that time, and you were famous and infamous. People talked about what you said. And they said, Dohmen's crazy. Why is he saying this and all that stuff? And I was just starting out, I just turned 30, I think. And I had no money. And I said, like, what does this mean to me? When you're trying to put a real estate deal together, 20% interest, it's kind of hard to make it cash flow. Do you know what I mean? It was really tough times, but there were good times. The other thing I want to say is that when I meet so-called financial experts today, most of them don't even remember 2008.
Exactly.
They're so young. All they know is a bull market.
Yeah.
All they know is that interest rates kept dropping, bond rates kept dropping, the price of stocks went up, real estate went up, everything was going up. We call it the everything bubble. And that's why I highly recommend this. There's only one newsletter, is the Wellington Report, because at least you'll have an idea of what's going on underneath the blankets. And so be careful of the age of the person you take advice from too.
Oh, that is such an important point. I wrote in the last issue of the Wellington Letter, 3 things you want to look for in your advisor. And if he doesn't have all 3, find somebody else that does. The first thing is the experience. I said, at least 44 years of experience in the markets. That gets you back to 1978. Right. You have to remember 1978 to 1981, because that is going to be replicated. I said, we're going to see the same thing. In 1978, we said, Treasury bond prices will decline by 40 to 50%. Again, that was called absurd. And it happened. They went down 44%. At this time around, I said, the inflation is going to exceed the level that we had in 1980. Okay, 1980 inflation was just hit. There was a 40-year high in inflation we have now. And we said the next target for inflation is going to be a new all-time high inflation, which would exceed the inflation level of 1917, which was 19.75%. So we're going to hit a new high in inflation. That means a new high in interest rates. That means a total disaster for bond prices. Bond prices are going to go down 70%. I'm going to
look confused here. So are you saying that we're in 2022 right now? Are you calling for inflation to go higher?
Yes.
And then how does that destroy bonds?
Because when interest rates rise, the bond prices decline proportionally.
Right. So, a bond is this. Let's say if a bond that's paying 10% is worth so much money. But if the interest rates, if inflation goes to 20%, the value of the bond drops. And what most people do not realize, the bond market is 1 million times bigger than the stock market.
Exactly. It's much bigger.
And so that's why I listen to Bert all the time, because, those is beyond my little meager brain. The point here is back when Bert and I were just starting out, there were exciting times. Are you saying it's going to get more exciting in 2022 and 23?
Yes, we have a special report, in fact, Bob, that we're offering people for free, because this is imperative that people know about this, that they don't believe all this stuff that you see and hear in the media.
Right.
The big thing now is inflation. And that basically kills the bond market. Do you have any idea how much T-bonds are down already? This is a number that you don't even hear on TV. The T-bonds are down 36% from last year's high. 36%. This is a disaster, because all the institutions, pension funds, so on, they're loaded up to the gills in treasury bonds.
I understand. And that's what I'm saying is, how old was the advisor?
Yeah.
You know what I mean? Most advisors today, all they
were
know
probably
is
little babies in 1978.
Right. But this is the other part about it is, so many of these idiots out there, there's no cure for stupidity, as you know, Bert. We've seen a lot of it over our times. But I have the 60-40 mix. What is it? Means they have 40% this and 60% bonds, and they're operating by these formulas that worked right after 2008. This ain't 2008.
Exactly. The world changes and they pretend it is static. How can you have a constant ratio of 60-40? That's absolutely ridiculous. You want to have a methodology that gets you out during a bear market. So if you don't see all of the signals that we see, doing this 12 hours a day, then at least you should have a simple, like a moving average. And so if it breaks through this, we're out.
Got it. But the point here, ladies and gentlemen, this bond market is the biggest in the world. It is the thing that keeps this whole place floating. It's what's keeping this whole world floating.
And it's going down. In Europe, we had, I think it was over 40% of all the bonds had a negative yield. So not only were you not getting any interest, you had to pay interest to own the bond. I mean, this is insanity. And people that said, oh, this is going to be the new normal. No.
I want to go on record, and Rich Dad Poor Dad, I said savers are losers.
Yeah.
You know what I mean?
Yeah.
Why would you save dollars when they're printing it? Counterfeit money. It makes no sense to me. Again, what is this free report that you made available to Rich Dad listeners?
It's headed Surviving Soaring Inflation, Opportunity of a Lifetime. And that's what it is. Don't be afraid. Take advantage of what's coming. Be prepared for what's coming. We've had, yes. Oh, there you got it. Good, great. Yes. It's free. We're going to put a price on. I said, no, let's give it away free.
Oh, thank you.
People have to know this.
Yeah. And you don't make recommendations what to buy or sell, do you?
No.
No, neither does Rich Dad. We're a pure education company. That's why Bert's a regular guest. And we're basically neighbors in Hawaii.
Yeah.
And
Bob, we do have 2 trading services. They come out usually 3 times a week, sometimes when it's active like now, every day. Okay?
I would recommend, if you're going to trade, I would subscribe or at least find out what you learned there, because I don't trade because you got to be smart to trade. I'm a real estate guy.
Oh yeah, we nail it to the day, and sometimes intraday. We say tomorrow after the first 2 hours, you want to do this and this.
Yeah.
We always say don't trade the first 2 hours. The first 2 hours is sucker bait. Okay, they take advantage of all the neophytes that are sitting there with their 1 minute charts, not realizing that technical signals on a 1 minute chart, they're only valid for about 4 or 5 minutes.
Right. Okay. So, again, we're probably going to take a break, and we'll be right back. Once again, this is Robert Kiyosaki. We're talking to Bert Dohmen. It's an old friend from Hawaii, still in Hawaii. I'm getting out of the People's Republic. I love Hawaii. I love the people, but that government is so Marxist. I can't stand it. Anyway, I love Hawaii. I love the people, but man, I tell you. Anyway, we'll be right back with more with Bert Dohmen. Please take advantage of his latest free offer from Dohmen, Dohmen Capital Research. I highly recommend it. I got it right here. You want to find out what's going on now? It's time to get this letter. Surviving Soaring Inflation, the Opportunity of a Lifetime. We'll be right back.
This episode is brought to you by 8 Sleep. Good sleep is the ultimate game changer and nature's best medicine. Consistent good sleep can help reduce the likelihood of serious health issues, decrease the risk of heart disease, lower blood pressure, and even reduce the risk of Alzheimer's. Yet, still more than 30% of Americans struggle with sleep, and temperature is one of the main causes of poor sleep. In Arizona, where I live, it can get hot. However, now I'm falling asleep in record time, faster than I have before, all thanks to my 8 Sleep Pod Pro cover. The Pod Pro cover by 8 Sleep is the most advanced solution on the market for thermoregulation. It pairs dynamic cooling and heating with biometric tracking. You can add the cover to any mattress and start sleeping as cool as 55 degrees or as hot as 110. The temperature of the cover will adjust each side of the bed based on your sleep stages, biometrics, and bedroom temperature, reacting intelligently to create optimal sleeping environment. The result? 8 Sleep users fall asleep up to 32% faster, reduce sleep interruptions by 40%, and get overall more restful sleep. The Pod Pro cover by 8 Sleep is so popular, it has garnered attention from CEOs, high performers such as Olympic gold medalist Red Gerard, and top CrossFit athletes, including 2021 fitness man on earth Justin Medeiros. They're all powered by 8 Sleep to make the most of their workouts and recovery, because good sleep is the ultimate game changer. Go to 8sleep.com/richdad to check out the Pod Pro cover and save $150 off Pod Pro and Pod Pro cover at checkout. 8 Sleep ships to the USA, Canada, and the UK.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Our guest, I want to say this has been interesting times, and it can't get much, I hope it doesn't get any more interesting than this, because I can't take it. I'm an old man. Our guest today is Bert Dolmen, an old friend from Hawaii. He's head of Dohmen Capital Research. And the publisher said, if you only subscribe to one newsletter, they don't make recommendations what to buy or sell. That's the reason I can endorse it freely. It's pure like Rich Dad Company or educational. And it's called a Wellington Letter. So Bert has this free for everybody here. It's Surviving Soaring Inflation, the Opportunity of a Lifetime, 2022. The reason dates are important is things are changing moment by moment. And the end is near. We don't know which way it's going to fall to. So again, it's Bert Dohmen, Dohmen Capital Research. He gave us those three things you got to look out for. One of the things I'm happy about is I'm an old man. And I meet these I feel for these guys. They're saying, oh, my dad gave me your book, Rich Dad, Poor Dad. I'm investing in real estate. I'm doing this. And I want to say, you should get the Wellington Letter first. Because we've all been there, Bert. We've seen the euphoria, right? And in euphoric times, it's about to end.
I have said that many times. There's only one advantage to getting older, and that is that you have the experience and hopefully you gain wisdom as you get older. And now being able to look back to the period in the late 1970s, the high inflation, the mistakes that the Federal Reserve made was all fueled by the Federal Reserve. Just like now, they don't want to take the blame, so they blame it on Putin. Poor guy over there. He's too busy killing people to worry about inflation. But anyway.
Bert, you said there was three things. One was make sure your advisor is over 30 years old.
Yes, he should be at least 44 years in the business. Okay, if he's not, find someone else. The other thing is he should be very well versed in advanced technical analysis. Technical analysis gives you the change in money flow going into or out of an investment.
Yeah, let me add to that. Okay. Fundamental investment, people look at a financial statement, income, expense, assets, liabilities. That's fundamentals. That's Warren Buffett's gig. Technical, the ups and downs, basically the emotions and moods and the flows in the market. Now, the thing that's interesting is Buffett says he doesn't believe in technical analysis. And so we have my generation, we have so many people just follow, buy, hold, and pray with Buffett. Buffett's our God. And I go, are you nuts? You've got to look at what Bert's talking about, which is advanced technicals. And the Wellington report has the advanced technicals in it. So how much does the Wellington letter cost?
I think it's $5.95 per year.
So about $50 a month.
Yeah.
That's the best thing you could buy.
That's a bargain.
No, yeah. But what I said, when he says you want somebody with 44 years, that's what you're buying. For $50 a month, you get to buy old guys like us.
you get usually 2 or 3 issues, and each issue is around 24 pages.
Yeah.
So there's a lot of stuff there.
And get it for your friends, family, and fellow idiots. And study, everybody read the report and study it. That's how you learn. That's how you gain wisdom from guys like Bert and myself.
Exactly.
So that's number one. What's number two?
You want to have, the number one was 44 years of experience in the business. Number two is you must know advanced technical analysis. And we teach that in the Wellington letter, as you know. We say, why does it work? Not just this is what the MACD says or the stochastic or something. No, why does it say that? And what does it mean? So that's very important. And the third item is don't ever listen to anyone who manages money. That is my view. Anybody that manages money has such a deep conflict of interest. He cannot go into the media and become bearish because half the people that he's managing money for would close their accounts. They say, oh, it's a bear market. I don't need a money manager. And he would not get any new clients. So it's such a deep conflict of interest. One thing I've always done in my life is avoid conflicts of interest. Like in the late 70s, everybody wanted to buy gold and silver. And I said, yeah, it seems like a great business. I knew
top of a market.
Our colleagues that had newsletters, they had 20 guys sitting there selling gold and silver. And I was very bullish on gold and silver at the time. And as you know, and gold went from $120 to 800 and so on. But I said, the bear market eventually will come.
Right.
What am I going to do then? I got 20 guys sitting there. And do I fire them or do I stay bullish? Whereas I know it's going to be a bear market. I said, I don't want that problem. Okay, so we're not going to sell precious metals coins. So it's so much easier to make a rational decision when you don't have a conflict.
The reason I'm laughing is because in the 70s, I was in my 30s, and I had no idea. So I was buying gold and silver and all this stuff. And exactly as I said, the bottom fell out.
Yeah.
No, it was a great lesson. And I still have the gold and silver. I never sold it, because I like gold and silver. I like stuff I can see, touch, and feel. But
we had somebody. They came from it's the richest family in a South American country. He came to me and said, "I want to start buying gold or trading gold." And I said, "How did you come to us?" Then he said, "So bank is our bank in New York, and they recommended you." I said, "I don't know anybody at that bank, And so anyway, but I said, we've just given a bear market signal on gold. And you're not going to make any money buying gold, but we can make a lot of money selling short.
Right.
And so I got in the chart book where you update the charts every day yourself and so on. And so he called every day, and my published consultation rate, which I think at the time was $1,800 an hour, and he made a huge amount of money, over $10 million. Just shorting gold. And for me, it was great because I knew he would call every day and I had to be prepared. And so I really started focusing on the charts, and it was great for me because, boy, when you really focus your attention, you can get it very good, Yeah. So, he was very happy and he made a lot of money just shorting gold. And then, as you know, gold went from 800. We start shorting at 694. So we missed that first $100 drop. Right. 694, you start shorting all the way down to 250.
Right. So I started picking it back up again at 3. And that was around 2020, I think. Yeah. I forget now. But anyway, that's the real market. It goes up and everything comes down. In your latest Wellington report, you also talk about shorting. What do you recommend? I don't recommend shorting because that is probably one of the riskier trades you can do because you're selling something. I took technical analysis and technical trading for 3 years, and I realized I'm a real estate guy.
It's good to recognize that, Yeah.
But anyway, you're recommending shorting, right? Your last Wellington report, you were talking about shorting something. What do you recommend shorting? Don't do it. What do you recommend?
Yeah, we shorted the entire stock market except for the energy and commodities. Energy and commodities we were buying, and the rest of the market we're shorting, like technology and so on. And so the first 3 months, we have a program, and this is for people who don't want to do their own work. We have a program called Hedge Folios. And it's not a managed account, but we give you 5 model portfolios that you can easily replicate with the allocation for each ETF. They're all ETFs. And so we give you 10% of this, 8% of this, and so on. And you can replicate that if you want to, or you can make it yourself. But anyway, we're up the 13% in the first 3 months of the year. The NASDAQ was down 9%. So that's an outperformance of 22 percentage points.
Bert, hang on, because you're now way over my head. And I'll just say this much. I'm going to say this again. I spent 3 years studying technical analysis. I'm a real estate guy. But I believe, I could be wrong because I just didn't like it. What does a short mean? To me, that is probably as high a risk as you can take.
No, it's not. No, it's no more risky than buying. And the fiction of Wall Street to discourage people from shorting.
So what is a short? What is a short?
You sell stock that you don't own.
Yes, that's what I'm saying.
Yeah.
Because
so you're borrowing.
Hang on, you guys. Let me explain this, okay? So let's say you see Apple shares at $10 and you think, I think it's going to go to $5. So you sell 1,000,000 shares of Apple stock at 10, hoping it goes to 5 where you'll buy it back and all this other stuff. But Apple goes to 100. So that's why you get caught with your pants down, because now you have to buy the 1,000,000 shares you sold, but at a higher price. Is that pretty close to it?
Well, yeah, but that's the other way around. You can also say, if I'm a bull, I buy Apple at $100 and it goes to $5 and I've lost 95% of my money.
I understand. I'm just explaining the risk. To me, shorting is almost the opposite of what I do in real estate.
You use risk control, Bob. You use risk control. You always have a stop. Before you enter.
I understand. I just don't want to paint. I'm become a shorter. I tried it. I got my ass handed to me.
Well, but just because you didn't do it right doesn't mean somebody else cannot. I do it all the time. 44
years of experience, Bert.
The first quarter of this year was one of the best I've had since the last crisis in 2008, which we always also predicted. Wall Street was, Goldman Sachs in June of 2008, they were so bullish. Well, oil is going to go to 200. I said, my God, well, you just got a major sell signal at 147.
Yeah.
I said, oil is going to go to 50. I was wrong because oil actually went to 30, So, you always have a risk. I said, before you take a position, people, write down on a piece of paper where your stop is.
Bert. The point is, people need to get educated, and if you're going to play,
of course, it doesn't come from heaven.
No, so that's why I love what you're doing. You teach people, you educate them, and all this. But it goes back to rule number one: make sure somebody's got over 44 years of experience before you take advice, and you get that experience reading the Wellington Letter and following what you're talking about.
Thank you.
Because just let me say it again. Let me say it again and again and again. I hear it probably 5 times a day. Some guy or a young woman will come up and say, my dad gave me your book, and I'm going long real estate. I'm going, are you shitting me? Do you know what I mean? And what you're saying, if interest rates go up, what happens to real estate?
Yeah.
Down, right?
Yeah.
And
exactly. The economy, we're going into a depression.
I agree 100% with you. People say it's a recession. So we're already in a recession.
You're right.
Depression's coming. And that's why you mentioned 1930. What happened in 1929 was the 29 crash. How long did that last depression last? 25 years.
Yes.
29 to 54.
And the political damage that comes along the way. Look at what the last depression gave us.
Yep.
They gave us Mussolini. They gave us Stalin. They gave us Hitler.
FDR.
100 Mao Zedong. 100 million dead people.
Yep.
It's going to happen. This time it's going to be done with a virus.
Yep.
So the last pandemic that we just got finishing, that was a trial run.
Right. So also
that was a dress rehearsal.
Also, you're talking about the opportunity of a lifetime. And the reason having experiences, I own several tons of gold now. Okay. And I own oil wells. And when oil went from $30 a barrel to $130 a barrel a few weeks ago, I got sexually stimulated. I said, "Oh my God!" Now the problem with oil going from 30 to 130 just temporarily, was it wiped out the middle class.
Yes,
inflation, and food prices are going to go through the roof because natural gas and oil go hand in hand, and that's how you make fertilizer.
Yeah, exactly. Natural gas is so important to the economy.
And all these greenies want to stop all that. I'm going, are you nuts? Are you nuts?
And they're against carbon. They don't even know. They must have skipped science class. And every molecule in our body is carbon.
Now, what happened to most of them was when they handed out the brains, they were missing in action at that time.
It's terrible. You've got the most stupid people in the world fighting global warming. We are now in the 3rd year of global cooling, and this is the Mauder minimum. You look it up. Mauder is Mauder, and NASA wrote about that a few years ago. They said we're now starting the Mauder minimum, which means that for the next 10 up to 30 years, the Earth is going to be cooling. And these warming people, they don't realize that they're being used by the big money people. There's a huge amount of money into this anti-carbon business. They're trading these certificates, carbon certificates. My God, who's making the money? On the first board of directors, of the Climate Exchange of Chicago, the board of directors, they had 3 executives of Goldman Sachs, and our former president from Chicago was also on the board. Yes.
Hawaii also. Bert, he's from Hawaii also.
Yes. There you go.
Criminal. Anyway, but I won't get into politics here. The point here is this: I was just watching CNBC, I think, and they were playing the hearings with Janet Yellen, and she's a greenie. She spent all this time talking about global warming, and I'm going, what about inflation? What about the war? What about the debt? And she's now a greenie. As you said, these guys are nuts, and we're listening to them.
They have no idea. I wrote a few years ago, I said, if anybody can show me how they can control the energy output of the sun, I'm willing to listen about fighting global warming, because 99.999% of all the energy coming to the earth comes from the sun.
Amen. So that's why I own gold, silver. I have some Bitcoin just to speculate into it. But I'm going to ask this: what do you think of the Fed? You have Treasury Yellen, you have Fed, and then you have this guy Biden and Kamala, the border czar. She's never been to the border except the Ukraine. So, Bert, it can't get any stranger than this.
No, this is, it's pathetic, but it is what it is. And we just have to make the best we can. And that's why you have to learn how to sell short, Bob.
And if you're a real estate guy, don't do what Bert does, because you have to be very nimble with the brain. Real estate guys' brains, there's tortoise and hares. Guys who are short are hares, they're rabbits. Real estate guys are tortoises, and I'm a tortoise. Hey, Bert.
Actually, real estate has been very good the last 2 years, You know that. You've done very well.
You must recognize your weaknesses. You know what I mean?
Well, you were in the right place, and I know you've done very well on real estate. But you also know when to hold them and when to fold them.
Yeah, I don't own stocks, but I own gold mines.
Yeah,
you know what I mean? And I own tons of gold that I control.
Much better.
And I own oil wells. I don't own Exxon or BP and all that stuff. I own the oil well.
Yeah,
I'm a hard asset guy, but. So when I talk to Bert, I read your charts and all this, and then I make my decisions because I'm still the tortoise. I'm still the fat ass turtle walking around the place, but I got to be ahead of the curve here. So Bert,
the tortoise lives very long. Has a very long life.
Yeah.
The rabbit
Bert,
doesn't.
I want to thank you. We'll have you back on again, but please subscribe to the Wellington Letter. How much is it again?
$595 a year.
That's the best insurance you can buy against stupidity of our leaders.
There you go. All right. Thank you very much, Robert. Say it again.
Bert, thanks. Keep going, man.
All right. All the best.
When we come back, we will final wrap up of the show radio. Thank you again, Bert. Bye. Welcome back. This is Robert Kiyosaki. I really want to thank our very special old-time friend. We're all old guys now, Bert Dolmen. And he and I were young men at the same time in Hawaii. We're in our 30s. And that's when the changes started, because in 1971, Nixon took the dollar off the gold standard. And I was flying in Vietnam at that time as a Marine. I said, what does that mean? What does that mean? Well, taking the dollar off the gold standard said money became trash. And then I come home, and my poor dad always say to me, well, you got to go to school and save money. Oh, Jesus. I said, why am I going to listen to an old Japanese guy, my father? So I went to listen to an old Chinese guy, my rich dad. And not to be a racist, because I'm been called a racist and a white supremacist. I'm not even white, but I guess only white people are racist. What a screwed up world we live in. But anyway, I want to thank Bert Dohmen. I think his advice and his wisdom is priceless, because I'll say it again. I get a little disturbed every time, because it happens like 5 times a day. A young man or young woman come up to me. Oh, I'm getting my real estate license. Oh, I'm buying real estate. I said, at the top of a market? So the reason I highly recommend, if you subscribe to only one newsletter, there's lots of them out there, is Bert Dohmen, Dohmen Capital Research, his Wellington report. And again, he has his free book, his free advisory, Surviving Soaring Inflation, The Opportunity of a Lifetime. And this is it here, just, you can get it. And The Opportunity of a Lifetime. And I agree 100% with him. You have no idea what it was like. Some of you were too young. I'd go into a Chinese restaurant, and they had whiteout on all the menus. I like Chinese food. But anyway, so one day rice would be $1, next day it'd be $2. And they had to keep whiting stuff out. I'm going, holy mackerel. And then I put together, when I was flying in Vietnam, why my rich dad, who was Chinese, said, watch out, because they took the dollar off the gold standard. They're going to print money. And it's called money supply, not interest rates. That's exactly what Bert was just saying right now. So they're going to try and raise interest rates to slow down the economy, and they're going to exacerbate. We're in a recession already because things are slowing. The velocity of money is slowing at high rates of speed. But also it's going to crash the economy, and we may be going into a depression. Now, you're such a bad news guy. I tell you something. I learned more in the 70s than I do today. Because when I was trying to put a real estate together when interest rates are 20%, you get really smart. I had to be creative and all this, still make it cash flow. So ladies and gentlemen, it's only how smart, how creative, how smart you are in the future and how resourceful and resilient you are. Because I'm afraid Bert's correct. This is May 2022. I think we're heading into a depression. There's going to be a recession. That's a given. We're already there technically. But a depression is going to be a whole nother Megillah. And some people will be wiped out. Exactly as Bert says, the last depression gave us communism. And I'm afraid this guy Biden and Kamala are agents of who? We'll know. But anyway, and then there's always a silver lining. If China invades Taiwan, I'm a billionaire. But other people get wiped out. So that's what Bert's talking about, technical versus fundamentals. So I highly recommend subscribing to the Wellington newsletters, like $55 a month or something. It's the best defense you can have against Biden, Putin, Xi, Treasury Secretary, what's her name, Janet Yellen. Oh, my God. And Powell. You have 3 clowns up there. And Kamala, the border czar, she hasn't been to the border. I was at the border yesterday, Mexican border. They're streaming across. They've opened the gates. Kids are making $1,000 a ride. So they rent one of these minivans. They can get 8 immigrants in. They're not from Mexico either. They're from all over the world. They load them into, I took pictures of it, and they chased me away. But there are loading kids, high school kids are putting illegals in their vans, driving them north. So you have a crew of 8. $8,000. The rental van costs you $100. Really good stuff here. But that's Biden and Kamala. I cannot believe how crooked this country is. So I'm afraid. I wrote the book, The Capitalist Manifesto, because I saw this all happening back in the 70s when I was flying in Vietnam. And it's coming true today. So anyway, I thank Bert. So Sarah, what did you think?
I thought it was your best show with Bert so far. A couple things, though, that I really...
Old guys, that's why old guys.
You guys have good stories to tell. But the thing I took away the most, the thing that stood out with me and that I'll go back and re-listen to, was his advice for 3 things to look for
old guys.
When you're finding an advisor. And not only because of what he said, it makes sense.
Yeah.
Because you always say, well, they've only known a bull market.
Yeah.
Well, don't you learn from the bear market too? So I thought that was great.
What happened in 2008, that was the first big, it was a CDS, credit default swaps. A whole market came apart. The repo market, repurchase market collapsed. The repo market collapsed in 2019 again. Mm-hmm. So we're setting it up right now.
Yep.
And we have 3 clowns, Yellen, Biden, and what's her name? Janet Yellen. The 3 Stooges, and people are listening to him. Mm-hmm. Oh, my God.
The other thing I loved is he said, don't ever listen to anyone who manages money because of the conflict of interest. That would have not, but that's who most people
listen to.
Yeah.
And that's why
and
we
it
have
makes, like John McGregor,
like Tom Wheelwright, Garrett Sutton, and all this.
Yeah.
We have no dog in the fight.
Right. So great show. Everybody should re-listen to it because there was a lot of great nuggets. But even more important, Bert is offering the latest edition of the Wellington Letter for free for our listeners.
God.
So, and that, like you said, the subtitle is Opportunity of a Lifetime. There is a lot of opportunity in there.
Yeah, exactly.
Specifically, just education. If you've never been exposed to a technical analysis, there you go. There's 23 pages of information. That's a great place to start for free. So we are so thankful that he's doing that for our audience. Like you said, we don't make a dime off of
nothing.
Dohmen. This is not an affiliate situation. So purely education.
Yeah. And with all our Rich Dad Advisor books and all this, the best defense against the three stooges, Biden, Yellen, and Powell, Fed chairman, is educate yourself.
Mm-hmm. Yep.
It is the most dangerous time in world history. I've never seen it this bad. And it goes back to 1971 when Nixon took the dollar off the gold standard. There is more. See, money can only come into existence via debt. That's the treasury market. Mm-hmm. Okay, that's beyond most people. And there's somebody, buy treasuries, buy treasuries, buy treasuries. They're safe. And they may be.
Didn't he say they're down 36% from last year?
Yeah. I'm going, and they, I have the 60-40. I don't know what that means, but I listen to the three village idiots, and they go, keep the 60-40. I don't know if it's 60% stocks, 40% bonds. I don't know. I don't do any of that stuff because I had a rich dad who was Chinese.
Well, and I like that he explained we live in a fluid world. You can't have a static plan for a fluid world.
Yeah.
Because you'll get burned. So I thought that was a great tip too, because that is so much of the advice floating around there from your typical financial gurus. And so he made a case for why that can't work.
Right. And then all this, I'm asked to pitch NFTs. We might do that, non-fungible tokens, and everybody's got a dog in the fight. That's what I call. If they're into NFTs, they're into NFTs. They want to talk to us. And I hesitate. You and I hesitate because we're not into that thing.
Well, I think it's not only me personally as the producer, I'm just not educated. I try to read up on NFTs and even crypto, which should make sense, but my brain doesn't absorb. So what I'm having a hard time resolving is we teach, cash flowing assets, and there's just so much risk from what I can tell. So anyway, but it is good to always offer the other side of the coin. We had a guest, the Equity Trust, not our typical guest. Probably somebody we'd never entertain. However, our job is to educate.
To educate.
Right.
Well, there's always three sides to a coin: heads, tails, and edge. Rich Dad stands on the edge. And that's the big thing. Another big problem coming up here is this. It's called Who Stole My Pension? My father was so proud, poor dad, he had a government pension. And that could be the worst thing you have today is a pension. Mm-hmm. Because there's no guarantees anything in there. Right. It's been stolen by Wall Street. That's my opinion. It's not a fact, but I can see the heist. Mm-hmm. So anyway, ladies and gentlemen, this is a very exciting times. I want to thank my friend Bert Dolmen. Please subscribe to his letter. It's $50. We make nothing on it. But if you don't, then listen to CNBS, they call it, It's such bullshit they're pumping out there. Why? Because their advertisers would kill them if they didn't endorse the stock market. I'm not against the stock market. I'm against conflicts of interest. Mm-hmm. So Rich Dad has no conflict of interest. Wants you to stand on the edge, have you put on the edge, listen to all sides. Anyway, I want to thank Bert Dohmen again. Thank you, Sarah. It was a fantastic show. And good luck to all of you. Bye.